Ladies and gentlemen, we are live.
Hello, and welcome everybody. My name is Andrew. Some of you may know me as Mr. McDeggins, and I will be leading you today in this orientation of the awesome BlackBoxStocks trading system. If you are here, I want to start off by congratulating you, because if you're here, it means you want to better your trading and that you realize that educating yourself is the most important rule for any trader out there, beginner or advanced. Keeping in line with that, I suggest you grab a notebook or a pen and paper, jot down whatever you feel will be important for you to take note of. If you have any questions, feel free to ask them at any time, and I will get to them at the end of each segment. So, pat on the back for you. Happy you're all here. Hope you're all pumped up to be here, because I sure am. And by the end of our webinar today, you are all going to know why. First, we're going to run through a list of our objectives for being here today. Throughout this webinar, you will learn the following things. First and foremost, we are going to cover the basics of investing and trading, from how to open an account and place trades, selecting the best brokers in the industry, to how you can use the BlackBoxStocks trading system to find the strategies that you're most comfortable with and that will work for you once you have an account open. I'm going to tell you right now, there is no magic involved in being a trader. It is all a matter of finding a strategy that'll work for you and constantly repeating over and over again. Here at BlackBoxStocks, our main goal for our family of traders is very different than any other company out there. We don't want you to just be a follower. No. We want you to learn how to use all of the tools and resources that BlackBox provides for you to become a self-sufficient trader and a contributor to the BlackBoxStocks family, all while achieving your financial goals. Also, we're going to talk about why it is most important that nobody ever trade alone. The beauty of being a part of the BlackBoxStocks family of traders is that today you're going to learn that you never have to trade alone again, no matter where you are. There's literally hundreds of like-minded and very active traders within our trade rooms that we want to couple you with, and you can always be connected to your new BlackBoxStocks family of traders, whether you're at home or using a mobile device. And again, we're going to get more into that as we move forward. I hope everyone's ready, because we're just going to jump right in. Here we go. We're going to start with section 1, which covers what stocks are and how we trade them. So, what is stock? To put it simply, stock is defined as money raised by a business through the issuing and sales of shares in their company. When you own a share of stock in a company, you essentially own a piece of that company and all of the rights that come along with that ownership. These rights include a claim on part of the company's assets and their earnings. They also usually, but not always, come with voting rights on things such as proposed actions of the company moving forward. In the stock market, you have the ability to buy and sell shares of companies through a broker on various exchanges. So how do we make money on stocks? Well, it's simple. If you are bullish, that means that you anticipate that the price of a stock is going to go up. You would instruct your broker to buy shares of a stock on your behalf to open your position. This is called going long on a stock. When you're ready to close out your position, you simply instruct your broker to sell your shares to close your position. As long as you sell your shares at a price that is higher than where you purchased them, you are making money. Now, on the other side of the coin, if you are bearish, that means that you anticipate that the price of a stock is going to go down. And if you want to play stocks to the downside, you would do what is called shorting, or going short. We're going to talk about how to trade when we're bearish in just a few minutes, so stick around. Before we get into that, we should discuss the many different types of stocks available for you to buy and sell in today's markets. Some of the stocks out there are known as ETFs, or exchange traded funds. What is an ETF? This is actually very simple to explain. There are different types of ETFs out there, and the best way to explain it is that ETFs are like investing into an entire collection of stocks that represent one sector, like technology or banking. You could actually go online and look up all of the companies that all the different ETFs have exposure to. Other ETFs are more like tracking stocks for commodities like gold. So if you're not the type of investor who can trade in gold futures, what you can do is trade GLD, which is an ETF that tracks the price movement in gold. ETFs provide a simple opportunity for traders to assume positions in entire market groups or sectors. Some ETFs have a lot of people trading in them, so they're easier to get in and out of, so others don't. So if you're going to trade in an ETF, do your homework, make sure there's enough activity in it where you can trade comfortably. Now, except for some specific occurrences like news or earnings reports, most stocks that are within the same ETF will actually trade very similarly to one another. So rather than taking on the risk of one individual stock, that can always get some bad news. I don't know, let's say their CEO got thrown in jail because he was embezzling money from the company, or if a bad financial report comes out on the company. Well, to avoid the risk of investing in one individual stock, you can use ETFs to invest in the entire sector and not have to worry that you invested in the wrong individual stock. Now, before we go any deeper than that, just like any business you get involved in, there is specific lingo that traders use to describe certain situations. It's important for you all to understand the lingo so that you can understand what everyone is saying to one another. Before, we mentioned being bullish, being bearish, going long, going short. As we go through our webinar today, I'm going to go over some of the lingo for you all the best way that I can as it comes up today. Just in case something slips your mind, or if we don't cover some of the lingo that you come across out there, we have included a few pages in one of the handouts that breaks down the most commonly used lingo among traders. So feel free to hang on to and refer to those handouts if you ever need to. It may take you some time to grasp the lingo, but in time you will get it. If you're still having an issue with understanding something, whether it's the lingo or anything else, that's cool. Don't feel bad. Don't be overwhelmed. You can still always reach out to other members within the BlackBoxStocks family of traders or to the moderators, even to me directly at any time in our trade room, which again, I'll get more into later on. I also want to touch on the importance of discussing trading psychology. I want everyone here to remember why we do this. We don't strictly do this for the money that we make. We do this to achieve all of the things we want to with the money that we make. Hey, maybe you want to take a trip somewhere. Maybe you want to live a certain kind of lifestyle in a bigger house or with a nicer car. Maybe you want to take more vacations during the year. Because of all this, when we get into a trade, it's usually because we're making an emotional decision brought on by our wishes. It's important to stress that we are trading up against algorithms. These are computers and sophisticated codes that are constantly scanning the world for news and other market-related events. 90% of trading done today is done by these machines. Now, machines do not have emotions. That's why, again, it is most important that nobody ever trade alone. Now, being that machines don't have emotions, it's okay that we trade with our emotions, but we have to be in control of our emotions. And in doing so, we have to expect that we're going to have some losses along the way. Stock markets are very random. There is no way to predict at any moment how the stock market's going to move. The best thing that we can do is recognize some of the patterns that we see, and when they are patterns that work for us, repeat them over and over again. Even with that in mind, there is never a 100% way to know exactly how the stock market is going to move. Nobody has a crystal ball, and everybody has losses along the way, so we've got to be prepared for them. The trick to all of this is to always be disciplined and trade using stop losses. These are tools that will protect you from ever losing too much in one trade. It's okay to be emotional, but again, we've got to be in control. And at the same time, we have to understand that trading is not a get-rich-quick scheme. I don't care what you saw on YouTube and what that banana-headed guru told you. This is not an easy profession and not a get-rich-quick scheme. Anybody who tells you that this is a simple way to make a living or that you can get rich by being their follower, they are just trying to make money off of you. Now, the act of trading stock itself, that part is simple. It's buying and selling, like owning any retail business. Sometimes you negotiate on prices when you buy and sell, and stocks are no different. Buying to open or selling to open is simply opening a trade. Selling to close or buying to close is simply closing a trade. That part is simple to understand. Now, when we look at stock prices, there are two terms that we need to know, so write these down. We have the ask price and the bid price. The ask price is the price we are going to pay a market maker when we are buying stocks from them. And the bid price is the price we are going to be paid by a market maker when we are selling stock back to them. The ask price is usually anywhere from a few pennies to a few dollars higher than the bid price. It depends on what stock you're looking at. Very liquid, action-packed stocks will have a much closer range between the bid and the ask. The ones that don't have much volume or more expensive stocks like Amazon, they may have a bid and an ask price separated by a few dollars. Either way, when you're trading and someone says that they are buying or selling at market, that means they are either buying on the ask price or selling on the bid price. Experienced traders know that we can use limit orders to bid our own prices when we're buying or name our own price when we're selling. Usually, this is somewhere between the ask and the bid price. This is called trading on the mark. Some platforms like Thinkorswim, which we'll talk about in a few minutes, will tell you where the mark is. Other platforms will not. Usually, the mark is about halfway between the bid and the ask. Now, I mentioned market makers. Who and what is a market maker? A market maker is who we are buying stock from or selling stock to. Usually, it's a company or a person who has a big financial background to them, and they can afford to buy a lot of extra stock to make it available in case there's a crazy spike in demand. Or they can just buy up all the stock that people want to sell and hold on to it until a later time when someone else wants to buy it. Market makers provide liquidity to the stock market, which makes it easier for us to get our orders filled. And market makers usually make their living somewhere between the bid and the ask prices. Now, just a quick note for beginners before we move forward. When you sign up for an account with a broker, there are two types of accounts that you can choose from. They are cash accounts and margin accounts. If you trade using a cash account, you will be limited to trading strictly the money that you've deposited. If you trade on margin, that means that you'll have extra leverage against the money that you've deposited. It's almost like having a credit line with your broker, and you'll be able to trade multiples of the money that you've deposited into your account. If you're a margin trader, you'll also have certain privileges and restrictions that cash account traders don't have to deal with, and we're going to get into that momentarily. But it's important for you to note that if you're trading using a margin account, just don't overdo it. I've seen people lose money that they did not have by trading using margin accounts. I'm going to circle back to this in a few seconds. Now, when we are bearish, we can do something called shorting, like we discussed before. This is when we instruct our broker to sell shares of a stock on our behalf to open our position. This is called going short or selling short. You might ask, Mr. McDeggins, how am I supposed to sell shares of a stock that I don't even own? It's simple. Most brokers have shares of stocks available for you to borrow to do just this. In the fine print, you can see that your broker says that they can make your shares available for other traders to short, unless you specify to them that they cannot do so. If you're part of a small broker and not many of those members own the stock that you're looking to short, then it's going to be tough for them to lend you those shares. So you may hear someone say, oh, I found shares of XYZ to short, where others may say, well, I can't find those shares to short. That means that whoever the broker is for the person that found shares to short has a lot of members that own that stock. Therefore, they can make those shares available to other traders to borrow if they choose to. Just note, interest is charged for the amount of time that you borrow shares for. When you are ready to close out your position, you will instruct your broker to buy back the shares that you sold to close your position. Now, as long as you are buying the shares back at a cheaper price than where you sold them, you will be making money. So let's imagine you go over to your friend's house. You knock on the door and you borrow a cup of sugar. Then you turn around and you sell that cup of sugar for $1 to someone else. Then you go somewhere else and you buy back a cup of sugar for 25 cents. So you can give your friend back the cup of sugar that he lent you. Well, you just made 75 cents. That is how shorting works. Now, special note here. If you're shorting a stock that pays dividends, which is a sharing of profits with shareholders, when dividends get paid, there's something called a record date. Who owns shorted shares on the day of a record date? Well, if you're short, now you're going to be a part of the whole equation. So that dividend may come to you, but you can't keep it. So it will go to the person you borrowed it from. Thankfully, we don't have to keep track of these things. Your broker will keep track of it for you. It is very important to note here that shorting stocks can theoretically cause you to suffer unlimited losses. Most of the time when we are shorting, we're doing so using a margin account. And using a margin account, you can do certain things that you can't do in a cash account, and shorting stocks is one of them. But don't worry, you can still play a stock to the downside if you have a cash account. Stick around, we're going to show you how we do that. However, I do want to point out that if you are shorting, you may get hit with what is known as a margin call. A margin call is a demand by a broker that you deposit more money in your account to cover your possible losses. Now, when you get close to a margin call, most brokers will usually try to take you out of that trade automatically. They don't have to do it by law. It's more of a courtesy that they offer, so they don't always do it. But a margin call always seems to happen right at the worst possible moment, like right before things start to turn in your favor. Also, we should be aware of a term known as days to cover. This does not mean that you have that many days to buy back the shares that you were short and cover your trade. What days to cover is a simple mathematical calculation. So let's imagine 2 million shares of a stock are currently short. Usually 3 million shares are traded in a single day. Well, if every short wants to get out, that average volume should be able to handle that in a day. But let's say only 1 million shares are traded in a day and 2 million shares are short. That means under normal volume circumstances, it would take 2 days for all the shorts to get out, which is why the term would read 2 days to cover. But believe me, if there's an event and people are scrambling to get out of their short positions, that is going to cause a pop in the volume, and that buyback volume is going to cause a run-up in the price of the stock. Now, if you trade using a margin account, you are subject to PDT rules. If you trade using a cash account, you don't need to worry about this. PDT rules say that if you have less than $25,000 in your account, you are not allowed to enter and exit a single position more than 3 times in a 5-day rolling period. So basically, you cannot open a position and close it in the same day more than 3 times in 5 days. If you violate this rule, your broker can lock up your account and suspend your trading privileges. Some brokers will lock up the account until the 5-day window is up. Others will lock you up for a full 90 days. The only way to unlock your suspended privileges is either to wait out the time period or deposit enough money into the account to bring it over $25,000. If you want to avoid this, trade using a cash account or get your margin account balance over $25,000, either by depositing to that level or by trading up to that level using a cash account and then switching over. Personally, I use a cash account for everything I do because I don't like to trade using someone else's money. And the kind of short bearish trades that we focus on can be done very easily using cash accounts. Stick around, I'm going to show you how we do that in just a little bit. I mentioned earlier that we would be giving you some things to consider when you're choosing a broker. Most people just go by commissions, but commissions are fairly competitive out there. They could range anywhere from about $5 to $7. Some brokers still charge $9 or $10 for commissions, so you should check how much commissions the broker that you're interested in is charging, but this should not be your only consideration. Some brokers will allow you more margin than others, so you should find out how much margin you'll be allowed if you're going to trade on margin. Also, it's important to consider how much the account minimum is to allow you to trade. Also, think about how much interest you're going to be paying when shorting or how much interest the broker is going to pay you just for having your account with them. Also, check what kind of securities you can trade. Will the broker let you trade ETFs and OTC stocks? Will the broker execute your trades fast enough? What kind of charting features do they offer? How easy is it to navigate around their site and trading platform? Is it easy to understand everything? Or are you going to be on hold with customer support all day long wanting to strangle someone? Do they offer extra features like level 2s or news and analyst reports? Do they allow you to paper trade? Will they let you trade in extended hours? Are there fees to use their trading platforms? Most broker platforms are free, but some brokers say it's only free if you trade X amount of times using their platform. And if you don't, there's a small fee that you get charged. So you need to find out exactly which broker you want to go with, consider all the reasons why. But don't worry, in a few minutes, we're going to make a recommendation on what we believe to be the best broker in the industry based on all of our experiences. First, I want to mention a special note to those of you who have an account with a no commission broker. Yes, some brokers charge no commissions, but you get what you pay for. I'm not trying to tell you that if you have an account with a 0 commission broker that you should run and close it immediately. But we don't recommend that you use them based on what we know from experience. So I want to make you aware of some of the issues. I have personally witnessed a situation where a friend of mine who was new to trading bid $1.75 on a stock. And by the time his order was filled at $1.75, The stock had fallen down to $1.60, but his no commission broker had not reflected that on their platform until after his order was filled. So he started that trade in the red. This is called price slippage, and it is super common with the no commission brokers. That same guy was trying to find out how to get in touch with customer service, but they didn't even have a phone line to call anyone. He had to email with them and didn't get a response for 4 hours, and at the end of the day, they did nothing for him. I tried to warn him. Some people just need to learn the hard way. Another issue with these brokers is that many of them will not allow you to trade same-day expirations if you want to trade options. Many of them also will not allow you to trade OTC stocks either. So be very wary of doing business with these no-commission brokers. So, which broker do we recommend? Well, the BlackBoxStocks family of traders recommends TD Ameritrade, the owner of the Thinkorswim platform, which is award-winning, and I'll actually be using it later on in the webinar. They have another platform which is web-based, but Thinkorswim is a standalone application that you can download to trade on your computer or using your mobile phone. Thinkorswim has no account minimums. They're super quick with order fills. They offer among the best charting features available in the industry. They offer you a free paper trading account, free level 2 quotes, and they have a customer service phone line and even a live chat support built right into their platforms. TD Ameritrade used to charge a $6.95 commission for stock trades and a $6.95 ticket fee for options trades, plus a 75-cent fee per contract for options. But they just rolled out with a new amazing commission structure. Stock trades are 0 commission, and options trades cost 65 cents per contract. This is awesome. If you want to sign up for a TD Ameritrade account, we have a link for you that you can access in our handouts, and just follow the simple instructions. If you already have an account, no problem. Your commissions should have automatically been changed over. Now, here in the BlackBoxStocks family of traders, some of us trade OTC stocks. What are they? They are over-the-counter stocks. These are stocks that do not trade on major exchanges. Instead, the trading is done directly between two parties without the supervision of an exchange. These stocks trade on what are known as the pink sheets or the over-the-counter bulletin boards. Many times, these stocks can trade for under $1, and just as often, they can trade for less than a penny. Not all brokers let you trade these types of stocks. The major brokers will usually do, but not all of them. These stocks can sometimes trade what is known as a small float, which means not many shares are available to the public to trade. And these stocks can have a small amount of volume to them. Therefore, the prices on these stocks can be very volatile. So, if you're looking at a thinly traded OTC stock and it's worth a penny and you want to grab 10,000 shares, by the time that full order is filled, it could cost you much more than a penny per share. The nice thing about BlackBoxStocks is that our system will only alert you to the OTC stocks that are easiest and most liquid to trade. Just a quick note, I've done quite a bit of OTC trading, and I've learned that it can be best to use all or nothing trades, which means that the broker can only fill your order if all the shares that you're purchasing are purchased at one time for a specific price. Now, when we trade stocks, there are two major camps as to how things should be priced by the analysts out there. Some of them use fundamental analysis, others go with technical analysis. Some use a combination of both. Fundamental analysis looks at things like price-earnings ratios, how much debt a company has, how much profit is on the goods or services that they sell, etc., etc., etc. These things get factored into analyst decisions when they release their reports stating how much they think a stock should be worth. So a lot of people will actually buy stocks when analyst reports are released, hoping that the stock's price will grow into the analyst price point in time. Technical analysis is a little bit different. That is when an analyst will look at a chart and find a pattern that they deem to be repeatable. Using those patterns, they'll look for a location on the chart to enter and look for a location on the chart to get out with profit. At all points, technical analysis should involve a stop loss somewhere just in case the trade goes against you. You may see a pattern that repeats itself from time to time, and you may want to enter at a certain area and get out at a certain area. But when doing your technical analysis, you should always take things into consideration, like when earnings are, if there has been or is expected to be news in the future that could impact stock prices, and other things of this nature. And using technical analysis, you should always stick to your rules. Do not deviate from the patterns if this is the route you're going to take in your trading. Technical analysis is all about location, location, location. So when doing your technical analysis, there are a few things to keep in mind. They are knowing the different indicators that are out there, knowing the different charting styles that are out there, and knowing the time frame of your trade. Is it a day trade, which means you'll be in and out in one day? Is it a swing trade, which means that you'll be holding for a few nights or weeks or months? Or is it a long-term investment, which can last you for years? Technical analysis is all about the strategic combination of using indicators and time frames to get an edge on the future direction of price. All of this really has to be factored in with the rules of supply and demand of stock. These rules were invented in the 1920s by the masters who wrote the books about them. Their names are Jesse Livermore, W.D. Gann, and Richard Wyckoff. These three authors talked about how demand for stock or buying really comes out strong when we hit a level of support. Conversely, they talked about how selling or supply gets very strong when we go up near a level of resistance. So keeping in mind where support and resistance is a key factor in doing technical analysis. Now, most indicators out there are designed to help you find support and resistance. And much of what these authors discussed in the 1920s is still very valid today. It's just that so many people have come up with so many new indicators that the waters have been a little bit muddied. In reality, there is no holy grail indicator. A moving average or a channel line could come in very handy for you, but a complicated indicator like a Fibonacci or a Bollinger Band can be tough to understand at first. Just know, no indicators can predict the future, but many of them can be used to give you an edge in terms of probability. Just don't ever depend on any indicator to be 100% correct when you're making a determination on whether to buy or sell. The most important thing to do is to have rules and a strategy when using your indicators. Now, strategies involve rules with our indicators, and people out there have come up with an infinite amount of strategies, but there's also something called a trade plan, which everyone should have, because a trade plan is unique and it is just for you. Your trade plan should define when you want to trade, what you want to trade, how long you're going to stay in a trade, what your profit target is, how long you will let your winners run, and your rules on when to cut your losses. Everybody has different desires and risk tolerances when they're entering a trade, so it's very important to define yours. Strategies will help you identify where your entry and exit locations are on the chart, but a trade plan will give you a solid outline of how to implement your strategy. Again, it is super important to define your strategy and stick to the rules that you have set. When we move into the later part of our webinar, we're going to talk about how you can use the BlackBoxStocks trading system to come up with a nice strategy that will help you make money. Let's talk about how to place a trade. The brokers out there give us the various order types that we typically use. The process usually involves you looking at a chart, keeping your trade plan in your mind, identifying your point of entry on the chart, your point of exit on the chart, and where your stop loss is going to be. The stop loss is the predetermined price level where you will close your trade to avoid further losses. Please, please, please do not trade without the use of a stop loss. I will now show you how I place my own trades using Thinkorswim. So when you log into Thinkorswim, you will notice that there are features all along the top. This is the monitor tab. This is where you'll view any open positions that you may have. This is a paper trading account, so I don't have any open positions right now. Thinkorswim also offers you the ability to run scans. If you have specific criteria that you want your stocks to meet before you trade them, you can enter those criteria into their scanner, and a population of those symbols that match your criteria will load up down here. Thinkorswim also offers among the most advanced charting features available in the entire industry. Now, I'm going to show you how I place my own trades in Thinkorswim. This is not necessarily how you have to do it. Usually on any platform that you deal with, there is many different ways to place a trade. So I recommend that you take an orientation from whoever your broker is, because they will show you all of the different ways to place trades using their system. This, for me, is a very easy way for me to be able to trade while still being able to have all the charts right in front of me. So what are we looking at here? Well, we are looking at a live representation of the market as it appeared on Wednesday, November 13th at about 10:30 in the morning. So let's say I were to want to place a trade. I've got a side-by-side view of a 1 minute and a 5 minute right next to each other. Down here, I've got my volume bars, MACD indicator, RSI, a little news feed, my level 2s, and right here is the times and sales. This is giving me a live representation of every transaction that comes through on each ticker. So whatever ticker that you have pulled up, when you have a transaction on it, you'll be able to see that. When any transaction comes through, you'll be able to see that in this times and sales table. Now, if I were to want to place a trade, all I would do is simply right click, I'd go to buy custom, and then I'd click on with a stop. When I click that, an order form is going to pop up with 2 levels on it. The top level is going to be where you enter your limit price. This is the maximum price that you are willing to pay per share. Beneath that level is where you're going to enter your stop loss. Again, the predetermined price level where you will instruct your broker to exit this trade for you should you break through that price point. Now, these aren't the only kinds of orders out there. There are also many other ones, and we're going to discuss a few of them. This was a limit order. A market order is a guaranteed entry, so you're not setting a limit price. You're telling the broker to get you into this stock no matter what the market price is calling for. You will pay a little bit more with market orders, but you are guaranteed entry when you are using a market order instead of a limit order. At the same time, you can also enter MOC or LOC orders. These are market on close or limit on close orders. You're instructing your broker to purchase the shares for you at the price that you have specified or at a market price on the close of the market session. So in the closing seconds of market, you will have these orders executed. MOC and LOC, market on the close and limit on the close. Now, when you're entering a stop loss, you can also enter what is known as a trailing stop. And that is an order type where you are actually going to be raising your stop limit as the stock goes green. So if I were to enter this stock at 1762 and I wanted my stop loss to be raised by 50 cents for every dollar that the stock goes up, I could enter that kind of a stop loss through the use of a trailing stop. Now, there are some time frames that we should go over. There's 4 different ones. We've got the day time frame, which tells the broker that this order is to expire at the end of the trading day. We've got GTC orders, good till cancel. These orders will remain open and fillable today, tomorrow, and all the days that follow until you cancel the order. Then we have EXT orders. These are for extended hours trades. These are if you like to trade in aftermarket or in the pre-market session, you will use your EXT orders. And then we have GTC EXT orders. These are a combination of good to cancel, and they will remain open through extended hours as well. Now, what if you wanted to enter a trade, but you got to be somewhere? You got to run, you got an appointment, you want to go to lunch. There's a specific type of order that you can enter where you will actually be able to enter what you want your profit target to be as well. And this is called an OCO bracket. And the way you do it is instead of clicking on buy with a stop, you're going to click on buy with an OCO bracket. And when you do that, another level on your order form is going to pop up. Now, let's say I was going to enter at 1762. Hypothetically, now the second level is where I'm going to enter my profit target. And on the bottom level, you're going to enter your stop loss. Now, what's going to happen here is you are instructing your broker to get you in at 1762 and pull you out of this trade either when the stock hits 1768 or when the stock hits 1760. Whichever one of these orders will trigger first will cancel the other. That is why it is called an OCO bracket order. One cancels the other. OCO. Now, choosing targets and risk reward when we are trading is a very important principle to go over. So let's say we're entering a trade. Well, when we enter a trade, we usually want to be buying at or near a level of support, and we usually want to be selling at or near a level of resistance. You always want to consider this and have your risk versus reward mapped out with a ratio of at least 1 to 3 before you enter any trade. Let's do a quick example. Let's say that you are considering purchasing Apple at $100 a share. You notice that there's support at $99 on Apple and there's resistance around 104.50. Well, you should look to exit and take profit somewhere around 103 to 104, and you should have a stop loss that's ready to kick in should the price break below $99. That will employ a risk reward ratio of 1 to 3. Now, it doesn't always have to be $1 to $3, but the ratio of 1 to 3 is what we tell you to shoot for. Even if you're willing to lose $6 a share, your reward target should be at least $18 a share. It's important to have this kind of system in place because if you hit your targets on half of your trades and you stop out for a loss on the other half, you will still be making money. So, for sure, always have your risk and reward mapped out as part of your trading strategy. This is called using risk-reward principles in your trading. Now, if you're trading a stock long or short and a major level of support or resistance is broken, we can use some indicators like pivots if you're a beginner or Fibonacci's if you're more advanced to give you an idea of where you should begin to plan for your exit. Again, what's important to keep in mind is that a multiple of reward potential versus risk will ensure that over time your account will grow. Let's talk about how people blow up their accounts. The most important thing to consider here is size. Just don't go too crazy on the amount of your account that you're putting into one trade. Use risk management and common sense to choose the correct sizing whenever you're deciding to enter a trade. We here in the BlackBoxStocks family of traders typically employ principles that don't involve always trying to hit a home run on every play. This keeps us from blowing up our accounts. No single trade should risk more than 1 or 2% of your account's total size, and the total amount that you have invested in the market between all of your trades at any given time should be no more risk to your account than about 5%. If you are not trading using stop losses, eventually you are going to be slamming your head against the wall. And if you keep making predictions insisting that a stock that you're trading just has to go a certain direction because you hope it will or because you think you're Luke Skywalker and the Force is with you, you are doing a disservice to yourself by trading this way. Not having a trade plan is very dangerous. So map things out and don't trade on hopium. Hopium is a word that we use in BlackBoxStocks that mixes hope with opium. Opium is an addictive substance, and trading based on what you hope versus using a strategy or a pattern can also be addictive. And trading on hopium can kill your account, just like opium can kill you. So no trading when you're on that hopium. Let's do a quick example. Let's say your account has a total of $20,000 in it and you'll allow a 2% risk on any trade. A 2% risk is $400. Let's say the stock that you want to trade costs $40 a share. Most new traders may say, well, I can get 10 shares. I'll have $400 at risk. Incorrect. We are going for a risk reward of 1 to 3 or more. Keeping this in mind, combined with knowing how much size you want to place in the trade, is the correct way to make this calculation. So, for this example here, where the stock costs $40 a share, let's make it simple. let's say you're going to pick up 200 shares. You're going to put a total of $8,000 into the trade. The right way to measure your risk is once you've decided that you're going to enter this trade, make sure that your risk is $2 a share and that your reward is around $5 or $6 a share or better. So if the stock hits $38, you sell to stop your losses. And if the stock hits $45 or $46, you take your $1,000 or your $1,200 profit and you wait for your next setup to come to you, presumably with a goofy smile on your face. Let's talk about the importance of continuous education. Most traders that are not willing to continuously learn do not last longer than 5 years in this business. They find out the hard way that they are not cut out for this, or they find out that another career may be more worthwhile or suitable for them. If you're going to make it and you want to make it in the stock trading business, you have to realize that constantly educating yourself is the most important way to ensure your success. People that make it in this business understand this principle. They understand that the learning never ends, and they strive to always add new strategies and techniques to their repertoire. They also understand that times change and we have to change with them. For example, a few years ago, nobody could have ever imagined that a single tweet could change the entire market's direction. But now, because of our president and because of CEOs like Elon Musk, we know that a tweet can affect the market. So we always have to be willing to adapt, we always have to be willing to learn, and we always have to be aggressively pursuing doing both. All professionals train. Even a world champion boxer has to stay in the gym to stay sharp. And one of the coolest things about Black Box Stocks is that we follow this rule too. We are constantly adding new resources to educate you on trading, and we are constantly adding new tweaks and features and algorithms to our systems to give our Black Box Stocks family of traders the very best edge possible in today's ever-evolving markets. So, I'll say it again, the education never, ever stops. Now, just by being here and trying to learn more about trading, it shows that you have the correct mindset that it takes to be successful. So, stick to always being willing to learn as you are right now. If you do that, then you will have beaten the top reason that traders don't make it. So, keep it up. You are on the right track.
Miyagi have a hope for you.
Now you see that? Even Mr. Miyagi has hope for you. And with that, we are going to move into the next part of our webinar. Let's take a little break and come right back, where we will transition into the world of options trading. And after that, we are going to dive headfirst into the Black Box Stocks trading system. So stick around, because as we move forward, it is only going to get better and better. I will see you in a couple of minutes. All right, I'm giving you a 30-second warning. We will be back up and running in 30 seconds. All right, welcome back. Moving into the second section, focusing on options here. I want you all to be aware of the handouts that we made available to you in case you need to refer to some of the lingo that comes up. And if you have any questions, feel free to ask them at any time in the questions panel. I will get to them at the end of the segment. Hope you're all ready because we are just going to dive right in. This section deals with what options are and how we trade them. So, what is an option? An option is a tradable security that instead of giving you part ownership of a company the way a stock does, you get rights to buy or sell shares of stock at a specific price point instead. There are two types of options that are available to trade. They are calls and puts. Traders buy calls if they want to be long, and they buy puts if they want to be short. Now, you can buy and sell options just like you would stocks, but compared to stocks, like we said, you don't have any ownership in the company unless you exercise those options, which means that you're converting your options into stock of the company connected to the option. Now, when you're buying calls, again, it's similar to having a long position. The rights involved give you the right to buy a stock at a specific price known as the strike price. These rights expire on a specific date known as the expiration date. The strategy here to profit when buying calls to open your position involves you're anticipating that the price of the stock is going to go up substantially and in a relatively timely fashion from the time the option was purchased. But we can also use calls as a hedge or like a type of insurance against losses. How do we do that? Well, probably the best example is when we had a couple of big funds out there that said they were going to short a large amount of Herbalife stock. There were a couple of other funds that wanted to fight that short position, so they started buying Herbalife stock. What took place was a big epic battle between funds that were long and funds that were short. It was like an episode of Game of Thrones. There were hair gel and dollar signs flying all over the place, and eventually the longs ended up winning. What many people don't know is that the fund who went short had purchased calls on the stock as insurance so that any losses that they would suffer from shorting would be made up for with the leverage of the calls that they bought. So you can use calls as insurance or as a hedge for any short positions that you may be in. Let's look at what puts are. Like we said before, puts are similar to having a short position, and puts give you the right to sell a stock at a certain price, again called the strike price, before the expiration date. The strategy here to profit when buying puts to open your position involves you're anticipating that the price of the stock is going to go down substantially and in a relatively timely fashion from the time you purchase the option. Remember, earlier I mentioned that if you trade using a cash account, you could still play a stock to the downside. Well, you are able to buy puts using a cash account. And unlike shorting, the potential for losses is not unlimited, but it is limited by the amount of money that you spent on the put. So if you bought $500 worth of puts, the most that you can lose is $500. Again, you can also use puts as a hedge if you are long shares of a stock. Let's say you're long Apple stock and you're worried that the price of Apple may fall, but you don't want to sell your shares now and buy them back later. What you can do is buy puts to cover your shares. And when the price falls to a level that you believe will be the bottom, you can sell those puts and profit on them to offset the losses that you encountered on the shares that you were holding. Now, an important thing to keep in mind here is that every one option contract that you purchase covers the rights to buy or sell 100 shares of the stock connected to that option at the strike price. So if you bought one call on Amazon with a $2,000 strike price, it represents your ability to purchase 100 shares of Amazon at $2,000 per share. Again, if you bought a call and the stock's price goes up, you might profit. If you bought a put and the stock's price goes down, you might profit as well. I say you might because certain things factor into whether or not you will profit, such as the volatility of the stock and the amount of time that you spent holding on to the options. Now, we're not going to go too deep into selling puts and calls or shorting options, but you are able to short options. There are reasons why you may want to. Today, we want you to focus on being long and short, being long on calls and puts before we get into selling calls or puts short. Now, if you're interested in learning more about shorting options, keep your eye out for other webinars that we make available for you in the future that will deal in advanced options trading strategies. We offer them all the time. So how are options priced? Well, two guys won a Nobel Prize Award for their formula on how to price options. Their names are Black and Scholes. These two authors won their award in the 90s, and their formula has been around since the 1980s. Now, there are other formulas out there that are being used sometimes, but for the most part, the Black and Scholes model is the model being used by the options houses to price the options that we buy and sell in today's markets. The Black and Scholes model has a bunch of things that go into it, and we have a diagram to show you all of that. Number one, stock price itself. It's a big one. More expensive stocks that have a history of movement generally have more expensive options associated with them. Then we have the strike price. If the strike price of the option that you're thinking of buying is close to where the price of the stock is trading, then those options are going to be more expensive compared to the strike prices that are farther away. The expiration date, if it is close, then you will pay less for that option as opposed to buying an option that has more time before it expires. Interest rates also have a piece to do with this. Recently, interest rates have been on the rise. So lately, the price for options has also slightly edged up in correlation with rates compared to where they were a few years ago. Dividends. If the stock that you're looking at purchasing options in is a dividend stock, you will probably pay a little bit more on the price as opposed to a non-dividend stock. Now, implied volatility is also a huge part of how options are priced. If there's a great deal of movement expected in the stock price of the option that you're purchasing, then you will end up paying a great deal more for those options. Now, in a stock like Amazon, which can have movements in price of $50 or more in a day, options generally tend to cost more because that potential for volatility in the stock's price is priced into those options contracts. This is especially true during earnings season. Now, what you pay for an option is what is known as the premium. Similarly to stocks, there's a bid price and an ask price, and we can use limit orders to specify our own prices. Now, I want to go over something here that's very important and that you need to know when talking about or even thinking about dealing in options. We've got three terms here that you need to know, so please write them down. These terms apply to both calls and puts. They are at the money, in the money, and out of the money. If you're looking at an options contract that is at the money, it means that the stock is currently trading at the level of the strike price. If you're looking at an options contract that is in the money, it means that the stock is trading at a level that is net positive to the strike price. If you are looking at an options contract that is out of the money, it means that the stock is trading at a level that has not yet become net positive. So, for example, if Apple is trading for $100 a share, a call option with a $100 strike price is considered at the money. A call option for $101 is considered out of the money, and a call option for $99 is considered in the money. Pretty simple, cut and dry. Now, when we talk about the value of an option, there's a couple of things to consider here, but it's very easy to understand. We've got intrinsic value and we've got extrinsic value. Let's say that Apple is trading for $100 a share, and you are thinking of purchasing calls with a $95 strike price. Those calls are currently selling for $6.50. Well, the $95 strike price will already have $5 worth to it because Apple is trading for $100. But on top of that $5 intrinsic value, That extra $1.50 that we are paying is the time and implied volatility priced into the contracts. These are things that are outside of the intrinsic value, so they are known as extrinsic value. But let's say that in that same situation, you were thinking of buying a call with a $105 strike price instead of a $95 strike price. Well, that $105 strike price may cost you $1.20, but you'll notice there is no intrinsic value because the strike price is higher than what Apple is trading for. So that $1.20 that you're paying is all due to the time value and implied volatility. Again, it's all extrinsic value. So of course, options that are in the money will have both intrinsic and extrinsic value priced into them as well. Let's take a quick look at this chart for a reference and reminder of what we just discussed. Buying calls is generally bullish. Buying puts is generally bearish. Selling calls is generally bearish. And selling puts is generally bullish. Again, fairly easy to understand. Now, some things to remember from the stock portion that apply to options trading are making sure that you are using the right broker. And we have a link posted to TD Ameritrade in the handouts with instructions on how to open up an account. Also, be sure to remember how trading psychology and technical analysis really are just priceless when it comes to trading in general. If you missed it, please go back to the stock section, give it a look over once this recording is made available. As always, we are more than happy to answer any questions that you may have. Now, I'm just going to touch on one thing regarding PDT rules here before we move forward. If you open the position using a combination of calls and puts all on one order ticket, then all of those positions have to be closed out in the same day to count against your PDT limits. So again, if you're trading with an account less than $25,000, we highly recommend that you use a cash account to avoid PDT rules. Now, just a couple of heads ups here. Number one, and most importantly, most options end up expiring worthless, especially those that are farther out of the money. Secondly, there are all kinds of advanced options trading methods out there that involve buying and selling combinations of puts and calls. These advanced strategies have all kinds of interesting names to them, like credit spreads, debit spreads, bull puts, bear puts, butterflies, condors, and a whole lot of other funky animal names like the double reverse squatting zebra bite of death. Okay, I made that one up. Advanced options trading strategies are combinations of buying and selling puts and calls. These combinations are designed to minimize the amount of loss that you may have, but usually they end up leaving you with smaller profits than a straight up call or put trade would. Most of the ideas that you will see posted in our trade rooms do not involve combinations of puts and calls. Rather, we're buying calls straight up when we're bullish, or we're buying puts straight up when we're bearish. You want to learn some more advanced options trading strategies? Keep an eye out for the advanced trading courses that will come out in the future. Like I said, we love to offer all kinds of educational courses for our family of traders. If you're already familiar with advanced trading strategies, you can feel free to tune into and place some extra focus on those of us that employ these strategies, because some of us do within our family of traders. Now, I'm going to show you how we see what options are available, and I'm going to show you what some of the terms mean on the screen where we view the options that are available for the stocks that the options are based on, and I'm going to show you how we enter orders to buy them. So I'm going to go under the trade tab and I'm going to enter Amazon. And what's going to pop up is a list of options expiration dates. Some of these options are issued on weekly time frames, others are issued on monthly time frames. Some indexes like the SPX, which is an S&P 500 index, will also offer Monday, Wednesday, Friday expirations as well. As the days and weeks pass, the expired dates are going to disappear and the new ones will appear. What's the difference? How do we tell? With your broker, it may be different, but with Thinkorswim, it's clearly labeled for you to see right here on the chain if something is weekly or monthly. Weeklies are highlighted in yellow and the monthlies are grayed out. Now, let's pull down the expirations for November 22nd, and what you will see is a pull down menu that almost looks like a spreadsheet. It may seem a little confusing at first, but it's really very easy to understand. On the left side of the strike prices, we've got our calls. On the right side of the strike prices, we've got our puts. Up top, we've got a bunch of customizable tabs, and I'm going to get into what information the basic ones provide for us. I usually keep it very simple in my own trading. This is what my screen will generally look like. We've got the last here, which tells us the price that the contract traded for last. We've got the net change here, which tells us how much the price of the contract has moved so far today. To the right of that, we've got our mark, and that is the midpoint between the bid price and the ask price. Now, there are more tabs that we can add out there, such as the gamma, the delta, the theta, and the vega. These items are known as the Greeks. I'm not going to go too much into them, but I'll show you what they look like, and I will briefly explain. So we've got the delta. The delta tells us that for every dollar the stock moves, this is how many cents the option contract will move with it. The farther in the money you go, the closer that delta will get to a full dollar for dollar movement in the option versus the stock price. But of course, the farther in the money you go, the more expensive options tend to get. And the further out of the money you go, that delta will get closer and closer to zero until that strike price level is more closely reached by the price of the stock. The vega gives you an idea of how much the volatility of the stock is priced into an option. So if a stock all of a sudden starts getting some crazy volume, that vega will increase, and thus so will the price of the option. The theta gives you an idea of how much the time factor is priced into an option. As we get closer to the expiration date, that theta will decrease, thereby lowering the price of the option. So you need to be careful when buying options, not to stay in anything that is staying flat for too long, because time works against us when we are holding options contracts. Just another thing that some traders like to take note of in these columns is open interest. Check out this number right here. This is open interest. What open interest tells you is how many of these contracts were open and outstanding at the start of the market day. This number will reset every morning before market. You can also look into volume for the day on an option, but volume doesn't tell you how many contracts were traded to open and how many were sold to close. Volume just gives you an overall number. I usually don't keep open interest and volume up on these columns. I usually just refer to it on the BlackBoxStocks trading system website, which is another really awesome feature that is integrated there. And I'm going to show you how we do that later on, so stick around. I also want to touch on something else, and that is implied volatility. Check out this number right here. It's a percentage. Now check out this number right here in the top right corner. It's another percentage followed by a plus or minus sign and a dollar amount. What that dollar amount means is that Amazon is expected to gain or lose $45.93 by the time these options expire. So when you're looking at your implied volatility over here in the strike price column that you're considering purchasing, if this percentage is higher than the percentage in the top right corner, that means you are probably overpaying for the option given market conditions. Now, that doesn't mean you won't profit off trading it, but it does mean that your battle is going to be that much tougher to win. If, on the other hand, this number is less than the percentage in the top right corner, then that means that the options house is providing this option for you at a bargain, which is not always a good thing, depending on how liquid the option is. Many traders subscribe to the train of thought that they will only want to buy options if the implied volatility for the strike price they are looking at is under 50%, and or the open interest of the option is close to or over 1,000, with a volume of at least 100 contracts traded. Why? Because the spreads in the bid and the ask is much higher if there's low volume in an option. These aren't mandatory rules, but they're good to keep in mind. I personally like to recommend that if you're a beginner, stick to a range where you'll get about 50 cents on the delta with an implied volatility that is not too overinflated. Usually that falls right around just out of the money or just in the money. So bearing all of this in mind, as you get more advanced, your choice of strike price really should depend on your consideration of your favorite combination of the things we just went over. Volume, open interest, implied volatility, time decay, days left to expiration, the average movement of the stock each day, and of course, the size of your account. Now, here in this next slide, we are going to have a quick recap of what we went over regarding expirations. Now, we do need to keep in mind that some brokers will exercise you if you're holding an option through the date of expiration and it passes the strike price in after hours trading. For example, if I'm holding Apple $150 calls, then in after hours trading, let's say I'm holding Apple $150 calls. Today's the date of expiration. Market closes with Apple at $148. If in after hours trading, Apple passes $150 a share, some brokers will automatically exercise your options and buy those shares for you. You should check with your broker to be sure if they do or don't automatically exercise. I do know that TD Ameritrade will not exercise your contracts based on after hours trading prices. You do not want to be surprised with something like that on a Monday morning, sitting down, seeing that your account is negative because you bought 1,000 shares of Apple for $150,000. Worse yet, you don't want that to happen and the price of Apple fall $3 before market. You'll start the day with a loss of $3,000. You may get hit with a margin call, and you may have the need to change your undergarments. Now, options funds settle with your broker the very next day, as opposed to money with trading stocks. That money takes 2 days to settle before you can use it again. This kind of goes back to what kind of an account you have, because you can trade your entire cash account in options one day and then just start over the next day. I'm going to stress here, if you're going to trade options using a cash account, make sure that your broker only activates you to trade options using your cash account and that they don't switch you over to margin. Now, we already mentioned strategies in the stock portion of our webinar, but it's worth another mention here. If you missed it, I highly recommend that you go back and review it again, because all of this information is pertinent when trading options as well. Just remember, stick to your strategy. Now, let's go over how to place an order to trade options. Something here to note is that unlike with stocks, if you're bearish and buying puts, you're still buying to open. So whether you're bullish and buying calls or bearish and buying puts, when you are buying contracts, you are always buying to open and you are always selling to close. Again, the order types out there depend on which broker you use, and the process usually involves you seeing on a chart what price you want to enter, mapping out where on the chart you want to exit, and mapping out where your stop loss is going to be. Again, please don't ever trade without a stop loss. Aside from that, one thing to note is that if you correctly calculate your risk, you can let your options expire worthless and let that act as your stop loss. Now, for me, I like to do things a little bit differently. I like to see the actual chart of the option that I'm considering buying. So if it's not a super time sensitive type of deal where I have to enter fast, I'll simply right click on the option that I'm considering buying and I'll hit copy on the symbol for that contract. Then I'll go into my charting section and I will paste the symbol for that contract right here in my chart. And what I now have is the chart for that actual contract. Usually I'll have the actual stock in the window right next door so I can get a nice full view of the picture of what's going on. When I'm ready to buy, just like we did before, I right click, I highlight buy, I go to with a stop or with an OCO bracket, I enter my limit price, let's say it was 18, and I'll enter my stop loss. Let's say my stop loss is going to be 16. Something important to note is that when you're dealing with options, the contracts must trade through the level of your stop loss in order to be triggered. So If I wanted my stop loss to be $16, in reality, I would probably enter about $16.30 instead of 16 because the contracts must trade through the level of your stop loss in order for this trade to be executed. Now, important thing to note here, when you're entering your options trade, make sure your expiration date is right on your order form. If it's not, you can correct it. Make sure your strike price is right. If it's not, you can correct it. And make sure that your contract type is correct. If it is not, you can just click right on and change it. No problem. That's how I enter my trades if it is not a super time sensitive type of deal. But if there's news or a recent development that I feel is going to have a significant impact on stock prices and I need to act fast, I can actually trade right off my trade grid. And the way I do it is I simply click right on the ask and boom, here's my buy ticket. When I'm ready to sell, boom, here's my sell ticket. Pops right up, right in front of you. Awesome stuff. If it's a time sensitive trade and you just want to jump right in, this is how you do it. Now, we mentioned risk versus reward before. Very important to keep in mind when you're entering any trade. So if you missed it, when this recording goes up later, I highly recommend that you check it out. The bottom line is you want your risk to be low and your reward potential to be high. And we always recommend a risk reward ratio of about 1 to 3 because that will ensure that over the long term, you are making money. Barring that, a good thing to keep in mind is when you're either buying calls or puts, take note of support and resistance of the stock price. We recommend to our BlackBoxStocks family of traders that if you're in calls and you fall below support to your risk level, it's time to think about cutting your losses. If you're approaching resistance near your target reward, it's time to think about taking some of those profits off the table. If you happen to power past your previous resistance level and now you're trading at new highs, while you're doing the happy dance of joy, you can use some new indicators like pivot points, which are easier to understand for beginners, or the Fibonacci's, which are more advanced, to help you find the next level of probable resistance. The opposite rings true if you're in puts. If you're in puts and you go up through resistance, it's time to think about cutting your losses. And if you're on the way down, approaching strong support, take some of those profits off the table. Again, keep in mind, you want to have a good risk-reward ratio strategy, usually about 1 to 3 to grow your account over time, even if you have some losses along the way. Let's do a quick calculation of what a smart amount to risk is when you're entering an options trade, just like we did for stocks. Again, imagine that you're trading with a $20,000 account and a 2% risk is $400. The stock that you want to trade options for is currently trading at $100 per share. The at the money $100 strike price costs $1 per contract. So what you would do here is one of two things. You could either A, buy 4 contracts and hold them until you reach your target near 103, which would give you a profit of about $800 to $1,000, or you can hold these contracts all the way through to expiration where you may lose the whole $400. But if you're more advanced and you have your discipline in place, you could do the smarter thing, in my opinion, and you can buy more contracts as long as you have a stop loss in place that will contain your losses at a $400 maximum. Again, 2% of your total account. Again, let's revisit how not to blow up your account if you're trading options. Don't go too crazy on size, especially if you're just starting out. Build a nice little strategy, gradually size up each trade as you gain experience and positive results. And again, not every play has to be a home run. It's okay once in a while to swing for the fences, but for the most part, we should be going for gradual wins to build our accounts up little by little. Let's not risk more than 1 or 2% of our accounts in any trade, and let's always trade using stop losses. Don't be unreasonable and go too far out of the money, no matter how cheap those options look. And don't try to predict the market. Instead, look at what the market is doing and let that be an indicator of what you should do, meaning just wait until you're comfortable with the trend or wait until the news comes and follow along with it. Remember, the trend is your friend. Always have a plan when entering your trades, complete with stop losses and smart targets. And again, do not trade on hopium. Overdosing on hopium will kill your account. and there's no way for paramedics to jump out of the back of an ambulance like the Ringling Brothers at the circus and bring your losses back to life. We've got a little rookie code for options traders. Let's go through it. Number one, listen and ask questions, even if they seem basic or you just want some feedback on your strategy. We're here and we'll answer your quick questions as soon as we can. Number two, start small and gradually size up as you learn and become more comfortable. Number three, pay attention to moneyness and try and stay in the money or at the money until you become more advanced. Number four, have a smart risk tolerance, and this means no YOLOs. YOLO means you only live once, and a YOLO play is a play that risks your money in the hopes of hitting the lottery. You work hard for your money. Don't waste it by trading too far out of the money or by playing risky YOLOs. YOLOs are for banana heads. Number five, know the basics and remember patience pays. Play monthly expirations at first so you can give yourself some time to learn. Soon enough, you'll find your strategy that you're comfortable with. Number six, another basic thing to know, manage your trades wisely. Make sure you're using smart targets and stop losses to maximize your gains and minimize your losses. Cut those losers and let the winners run within reason. Remember, you are never stuck in a trade. You can always just click a button and get out. Number seven, strategy, strategy, strategy. Be a trader with a strategy, not a follower of someone else's and theirs. Number eight, learn what you're buying, learn why you're buying it, use the data in front of you to make smart decisions, and stick to the facts. Remember, the trend is your friend. You're going to hear this often. You want to wait for the trend to reveal itself, you want to hold hands with it, and you want to go with it while you're whistling songs of profitability and joy. Stop trying to play against the trend. No one can call the top and nobody can pick out the bottom. You just have to play what the market gives you. Number nine, study, learn, and practice, practice, practice. Do not be afraid to paper trade. A solid foundation of the basics of fundamental and technical analysis will also help you go a long way. And we provide you with tons of resources in our educational area to help you do just that. Always stay learning. Number 10, finally, execute. Once you have your strategy set, learn to stay green. The best way to build your knowledge and confidence is to aim for and take your small profits in the beginning. Constant small wins add up fast, and small losses can be made up for even faster. Don't be a boob and try and become a millionaire overnight. Remember, the education never stops. We went over this in the stock portion of our webinar, so if you missed it, definitely go back and watch this segment when the recording is made available. The important thing to note here is don't ever stop being willing to learn. Okay, you've made it this far. After the break, we are going to come back for the main event. Be very, very excited because after a short break, we are going to dive headfirst into the BlackBoxStocks trading system. And you're going to learn how to use the BlackBoxStocks website to grow your account and achieve all of your financial goals. Not only that, but we're going to show you some of the alerts that the system made in the past 7 days and some of the trades that our family of traders have made using the resources that we provide for you. So I will be back on in a couple of minutes, and I will see you all then. I'm giving you guys a 30 to 1 minute warning. 30 seconds to 1 minute warning.
Ladies and gentlemen, this is the main event of the evening.
Welcome back. We are ready to begin our main event. We are ready to show you how to use the BlackBoxStocks trading system to help you achieve your financial goals. Before I take you over to the website itself, I want to give you a little bit of background information on us. BlackBoxStocks is not just a group like others out there where you are paying for buy and sell alerts from one person on stocks that can be easily manipulated and easily lose you money. What BlackBoxStocks is a complete trading system like nothing available anywhere else in the world. The meat and potatoes of BlackBoxStocks is a web-based platform that provides you with pre-market, live market, and post-market scanners. These scanners alert you of unusual market activity using various algorithms just like the major institutions use. And our algorithms have undergone thousands of hours of backtesting from us to make sure they are efficient. The information that we provide is not strictly limited to cheap, low float stocks, but the data that you will have access to watches over the entire market, all of the NASDAQ, all of the New York Stock Exchange, even the OTC stocks as well. The alerts that we provide have to do with price movement and volume. On the options side, we have a real-time market monitoring system that looks out for unusual activity and lets us know what is taking place in real time with very specific, easy to understand language to let us know exactly what is happening. We provide all of this to you while at the same time providing you with a real-time news feed to help you keep track of why the stocks you are focused on are moving. We also provide you with a state-of-the-art advanced charting system and tons of educational resources, just like this webinar, to help you follow the golden rule of always educating yourself. And we provide you with all of this and much, much more, all right in one place. To top all this off, part of our complete trading system is our trade rooms, complete with text and live voice, full of like-minded traders that we have for both stocks and options. Our trade rooms can be accessed from a PC and using your mobile phone. So no matter where you are, you will never have to trade alone again. In our trading rooms, we have experienced traders, not just followers who stay silent and follow one or two people. We have highly experienced traders that share their trades all day long in our trade rooms and on voice. The beautiful thing about what our traders are doing is that we do not have traders that manipulate the price of the stocks or options that we are dealing in. Most of the time, we focus on the big blue chips, which are much, much harder to manipulate than the low floats that other services out there are typically dealing in. So you don't ever have to worry that someone else in our family of traders is going to be making money off of your buys while you stand to lose money. Our community is highly interactive. Everyone helps everyone to learn and achieve their financial goals. And I'm going to take you more into our trade rooms in just a few minutes. Let's go through all the aspects of our system. We've got the stock page for the NASDAQ and the New York Stock Exchange. Then we have a separate page which focuses on the OTCs. Then we have a third page which focuses strictly on options. These three pages share the following components. We've got the alert log. We've got the scanners. We've got volume ratio information. We've got a real-time news feed. We've got a stock trade room, and we've got StockTwits integration, and much, much more. All of this can be accessed from anywhere on the website. So where do we start? Well, it's important to keep in mind we should always have a daily routine. It's just like the gym. Repetition creates rewards. Your routine should involve focusing on the top gainers of the day, and we should always be reviewing the scanners to see what is really moving and keeping our eyes on the charts and news feeds that are made available so that we can all see what's happening and why with the stocks that the system has alerted us to. At the same time, it's important to watch over the consensus plays. Watch over what everyone else is doing. We offer 2 different trade rooms. Our options community trade room can be accessed on Discord, and our other trade room, which focuses mainly on the stocks, can be accessed right in the BlackBoxStocks website. No matter what you like to trade, whether it's stocks or options, you can be sure that we have a place for you to be around other like-minded traders with tons of experience to help you learn and grow. Now, with all that being said, let's head on over to the BlackBoxStocks trading system website. Let's do a quick walkthrough on how to use the alert system, and I am personally going to show you in detail how everything works. At the end, I'm going to show you a couple of combinations and routines that you can keep in mind to help you make money, money, money. So when you first land on our webpage, this is what it looks like. Very clean, very organized. Everything is very accessible to you. Everything that you're looking at here is crucial to helping you become a successful trader, and I'm going to show you why. What you are looking at right now is a live look at our website as it appeared during market hours on Wednesday, November 13th, 2019 at about 11:30 in the morning Pacific time. Now, I'm going to start at the top and I'm going to move from left to right. You'll see that we're under the tab dealing with the NASDAQ and the New York Stock Exchange. Over here, we have the Q's price information, and right next to it, we have the Dow Jones Industrial Average price right next to it. This is to help you see and track the movement of general market conditions overall for the day. We've got a charting section here, which I'll load up. We have our proprietary one-of-a-kind volatility indicator here, which I'll load up. We've got our alert log down here on the bottom left. We've got our top gainers. We've got a real-time news feed, and all the way over here on the far right, we have an interchangeable panel with 8 buttons along the bottom. I like to call this the BlackBoxStocks panel of power, and I'm going to show you why I call it that in just a few minutes. Now, let's talk about the alerts first. Okay, when you come in the morning, you'll notice that the alert log is going to be completely empty. As these alerts begin to populate, so too will the top gainers section. These are the top gainers of the alerts that we have provided. Now, you'll notice that we have different colors. What do all these colors mean? Well, I'm going to go over it all with you, but if you ever need a refresher course on what any of this stuff means, all you have to do is simply hover right over this question mark, and you can see in spelled out for you exactly what each alert means. Now, in the pre-market, there are 3 colors to watch out for. We've got these dark blue, we've got these red alerts, and we've got these tan alerts. The light blue alerts are pre-market rapid riser alerts. These alerts will only occur in the pre-market when the stock's price is up significantly from the previous day's close and when our algorithm detects that it is continuing to trend upward within a certain time frame. Now, on the flip side of that, we have our rapid decliner alert. This alert is triggered in the pre-market when our algorithm detects that the stock's price is down significantly from the previous day's close and that it is continuing to trend downward within a specific time frame. Now, we also have those tan colored alerts. We don't have any today because they're a little bit more rare. These are usual suspect alerts. These alerts will trigger when our algorithm is alerting you to a stock that we've already alerted you to in days past, and the usual suspect alert will only be triggered if the stock that we are alerting you to has a history of moving off of the alerts that we've provided. Awesome stuff. During market hours, we've got 3 other colors to watch out for. We've got the whites, we've got the purples, and we've got these light turquoise blue alerts. So these white alerts are rapid price spike alerts. When our algorithm detects that a stock experiences a rapid increase in price in a very short time frame, then these alerts get triggered. These purple alerts are unusual volume alerts. So if something starts getting some crazy volume out of nowhere, these unusual volume alerts will trigger. Then we've got these turquoise alerts. This is the legendary BlackBoxStocks retracement alert. This alert will trigger when our algorithm detects that a stock had an extreme increase in price in the pre-market, and then the stock came back down to a level where our systems detect should be the area where it begins to retrace upwards again. A retracement alert. It is legendary, and I say that because it is usually right 7 or 8 out of 10 times. Awesome stuff. Now, let's talk about the first button on the BlackBoxStocks panel of power. This will bring you to our alert stream. Our alert stream is going to give you all kinds of awesome information. It will tell you when stocks are hitting new 52-week highs, when stocks are hitting new 52-week lows. It will tell you when a stock is having intraday multiple highs. So if a stock keeps having multiple high of days, our alert stream will alert you of that. You will also be alerted to stock halts and unhalts through the alert stream. So when something is halted, you'll see it, and when something is unhalted, you'll see it. And we'll even tell you what kind of a halt it is. Now, we also offer you a window into the dark pool. The dark pool is where these gigantic institutions place their trades so as to not disrupt trading on regular exchanges. Let me give you an example. Right here on SRPT, there was a 113,000 share dark block. It was $100 million. If $100 million worth of trades are placed on a regular exchange, that could cause a disruption. So the dark pool is where these gigantic institutions place their trades to not disrupt the trading on other public exchanges. Now, access to dark pool information can cost you anywhere from $75 to $100, $150 a month. And we offer it to you absolutely complimentary as long as you are an active part of the BlackBoxStocks family of traders. You will always have access to a window into the dark pool. If you ever want to filter out the information in the alert stream, all you have to do is click the filter button and you can select the specific information that you want to see. If you only want to see dark pool information, or you only want to see halts or new highs or new lows, you can absolutely pull that information up using the alert stream filters. Now, how do you zero in on something to trade? Well, let's say that you only like to trade stocks within a specific price point. That's always the best place to start, is naming your price point. Let's say I only like to trade stocks that are trading under $5. What do I do? Well, all you do is you highlight the NASDAQ New York Stock Exchange section, and you can select your favorite price point. If you like to trade blue chips, you can select over $100. If you like to trade the pennies, you can select under $5. And what happens when you select your favorite price point? The entire website will now zero in on your favorite price point. You will only be alerted to stocks in the alert log that fit in your price point, and you will only be shown alerts in the alert stream for stocks that fit within your price point. Awesome stuff. Now, how do we focus in even farther? Well, I see FCEL had some action. So when I see the action, when I see it begins to populate on the top gainers, I click. I can either click it here, I can click it here, or I can click on anything that comes through the alert stream. And what happens when I do that? When I do that, the chart will begin to load, and so too will our volatility indicator. Now, let's talk about our charting system. This is an advanced charting system. real-time quotes come through on these charts. And I call it an advanced charting system because that's exactly what it is. You can select your favorite time frames. You can select your favorite charting styles, whether you like line charts, bar charts, candle charts, Heikin-Ashis, and you can even add your favorite indicators. We offer the most popular indicators that are available today. And if there is an indicator that you want that we don't have loaded up, just let us know and we'll get it loaded up for you as soon as we can. Once you have your favorite charting style all loaded up, you can save your views to just pull them up at a later time. You can instantly pull up your favorite charting styles. Now, once you have your favorite charting style loaded up, if you want to do some technical analysis, you can click this button right here and boom, now your charting system loads up and blows up and gets even bigger for you to be able to now do some technical analysis if you'd like. Awesome stuff. Very, very useful tool to have built right into the website. Now, let's talk about our volatility indicator. This volatility indicator is one of a kind. You will not find anything like this anywhere else in the world. And what this volatility indicator is going to do is give you an idea of what the anticipated future direction of stock price is. So when you see this volatility indicator pitched sharply to the right, that means that we should see an increase in price coming. And like now, when you're seeing the volatility indicator edge slightly to the left, okay, that means that you're going to see a little bit of a drop. Now, what you're looking for is consistency either way. You don't want it to be 1 second one way and then 1 second the other way. Like over here, you would have seen the volatility indicator remain consistently pitched to the far right because we had a swift rise in price. Now, when this pullback came, you would have seen the volatility indicator shift consistently to the left. And once we reach the bottom of the pullback, you would have seen that volatility indicator either go neutral or pitch back over to the right again. What you're looking for is consistency. If you like to trade directional momentum or scalp, this volatility indicator is going to be as good as gold for you. Now, I'm not going to spill the beans on exactly how it works, but I will tell you this. The volatility indicator is actually reading the level 2s and the price action for you in real time to tell you what it means in terms of future anticipated direction of price. Now, the next button on the BlackBoxStocks panel of power is our pre-market scanner. I'm going to skip over one button and then I'm going to go over to the live market scanner. The pre-market scanner and live market scanners will tell you the top gainers and losers in the pre-market and the top gainers and losers during market hours. These are very helpful. Why? I'm on the West Coast. I can't always be awake at 5 o'clock in the morning like I was today to keep up with the pre-market or like I was on Wednesday. So what do? Well, if I'm late, all I have to do is click on the pre-market scanner or click on the live market scanner and boom, now I'm instantaneously caught up with what the biggest movers are. Now, we also have a post-market scanner right here in the middle. This is proprietary. You will not find a post-market scanner like this anywhere else in the world. You might say to me, Mr. McDeggins, I see plenty of post-market scanners. What are you talking about? Well, our post-market scanner is the only scanner of its kind because all of the volume that you will see in the post-market scanner is strictly post-market volume. The volume counter begins counting at 0 as soon as market ends. Awesome stuff. Not something that you'll see anywhere else. Look at the volatility indicator. Look at the price action. Look at the volatility indicator. Look at the price action. It works. I left it there because I was hoping that we would get some volatility. As soon as that volatility indicator started pitching to the left, we started dropping in price. I'm telling you, volatility indicator is awesome. It is one of a kind. You will not find it anywhere else in the world. Speaking of things you will not find anywhere else in the world, we have another one-of-a-kind volume ratio information scanner. This is going to tell you what is trading the most unusual volume. Now, let's take a look. It's not only going to tell you how much, it's not going to only tell you what's trading the most unusual volume, but it's also going to tell you by how much it is trading unusual volume. So NSYS is trading 15 million shares today. That is 3,000 times its normal volume. So we are not only telling you what is trading the most unusual volume, but we can actually tell you by how much based on the, I believe, 10-day moving average that we use as our metric. Awesome stuff. You won't find it anywhere else in the world. So NSYS is having some serious movement today. I wonder why. What if we want to find out why the stocks we are focused on are having such extreme movements? Well, this is one of the coolest features that BlackBoxStocks offers you. And it is a real-time, up-to-the-second live feed of streaming news. The news comes from Fly on the Wall. And if you look, Fly on the Wall by itself charges about $40 a month for a subscription to their news feed. And you, as part of the BlackBoxStocks family of traders, you have access to this news feed included complimentary as part of your membership. So how do we access the news feed? Well, all we do is we simply click this button right here. And when we click this button, up pops the news. And look, here was the news. Third quarter results. So they must have had good third quarter results. Something came out in those results that traders loved. And let's see what the news was for FCell. Let's see, all we do is click and boom, here comes the news for FCell. FCell completes restructuring phase of their transformation. Awesome stuff. They announced the conclusion of their engagement with Huron Consulting, and they announced an 8-year, $200 million strategic corporate loan facility with Orion Energy. So we always get the news here when there's a runner. Listen, the bottom line is this is a major moneymaker for our family of traders. If you want to just watch the news feed and see all of the news PRs as they drop in real time, you just click on all news and boom, now you're getting every single news PR as it drops in real time. The fact is, staying ahead of the news lets you stay ahead of the market. And the BlackBoxStocks trading system makes sure that you're always able to get the news fast, first, and free as long as you are a member of our family of traders. The next button that we have on the BlackBoxStocks panel of power takes you over to our main room. Now, in our main room, you will see some stock talk. You will see some members asking for support if they need help with something. You will also see some confirmations being posted, any updates that we have coming out regarding the service. We'll post them in here in the main room for everyone to see. But I told you that we also have a stock trading room built right into our website. How do you access that? Well, all you do is you click on this button right here. When you click this button right here, you will have the option to click on TIA 1. And when you click on TIA 1, boom, you'll be in TIA's trade room. TIA is a trader with a super high level of intelligence and many years of trading under her own belt. She really has trading built into her DNA. Her father is an experienced trader, and he taught TIA very, very well. She's always making amazing calls. She's able to teach, has a super tight level of laser focus that has served every single trader who has traded alongside her in helping them grow their accounts and learn to be more self-sufficient. If you're a stock trader, our trade room with TIA and the other traders alone is an amazing advantage to have over others in the market. And TIA's here every single day during market hours. At the same time, if you want to have your own trade room or you want to hold some of your own classes, you can actually create your own channel. All you do is click on my channel and boom, You've got your own trade room built right into the BlackBoxStocks trading system website. Now, to the right of the main room button, we've got the StockTwits integration. For those of you who like to see who is saying what on StockTwits, all you have to do is click right here and boom, you'll get a live feed of the StockTwits. Awesome stuff. Now, let's say you want to tune in to the StockTwits of a certain ticker, or let's say you want to load up a certain ticker that we haven't alerted today. How do we do that? All you have to do is enter the symbol right here in the volatility indicator, and boom, the entire website, meaning the charting system, the volatility indicator, and the StockTwits feed, will now switch directly to whatever ticker you are wanting to look into. Awesome, awesome, awesome stuff. Now, let's head on over to the OTC tab. The layout is exactly the same. Everything is pretty similar. What you'll notice about the OTC is that many of these stocks are trading below 1 penny. We advise you to be careful if you don't have experience trading stocks with this type of pricing. Yes, the movements can potentially be explosive, but so can the losses and the diarrhea that you may suffer as a result. If you're a beginner, please tread lightly, build as you go. Personally, I used to be a major OTC trader for years. I'm going to tell you why I shifted my focus over to options pretty soon, but nonetheless, you can see there are again going to be different colored alerts. Today we only had white alerts, but usually we get white and yellow alerts. What they mean is simple. The white alerts are your rapid price spike alerts, and the yellow alerts are the amazing BlackBoxStocks bouncer alerts. These alerts are only triggered when our system detects that a stock had fallen from a high level all the way down to a level that our system believes should be the bottom. Now, usually our system picks out the dead bottom of the fall. I've never seen anything like it in all of my years of trading. I've never seen an alert so efficient. The BlackBoxStocks yellow bouncer alerts. Awesome stuff. Now, just a fair warning. If you're going to play these without experience, start small and size up as you gain experience. And when you're playing those yellow alerts, you only want to play them on the gradual bounces, because something that went straight down and then straight up within 10 seconds, that could just mean a shenanigans trade took place, meaning somebody arranged something fishy down there. Be aware, there are significantly less alerts coming through on the OTC side, because there's generally less algorithms being satisfied by stocks on the OTC than there are on the New York Stock Exchange and the NASDAQ. Now, similarly to before, if you want the alert stream to scan over and show you alerts from the OTC in general, just shift on over to the alert stream in the BlackBoxStocks panel of power. Boom, you're getting live alerts to let you know what is happening across the OTC. Again, we have the volume and news feed buttons as well. So if you want to see what's trading the most unusual volume on the OTC, you're more than able to do that. Now, what if there's a big movement on an OTC stock, but there's no news out on it? Well, what does that mean? Well, it could mean any number of unsavory things could be taking place. So if you're not experienced in trading the OTC, tread lightly, go out there and learn, gradually build up. Now, I mentioned before that I used to be a major OTC trader, and while I still like to play in my old sandbox every now and again, especially if I catch a nice bouncer alert, I have shifted my focus over to options trading. And now is the time for you all to learn why. This right here is the options tab, and I like to call this part of the system the holy grail for options traders. Now, when you click over to this area, you'll notice that the alert log is going to expand and the volatility indicator is going to disappear. That's because we have to provide you with a lot more information on these alerts. The charts will stay there for you, and the box on the bottom left is going to stay there for you. But instead of showing you the top gainers, it's going to show you the symbols for which we have captured the highest dollar amount of options flow. Now, what are these alerts? These are unusual trades being placed in the various options for the tickers that are listed. These are trades being placed by huge institutions. So over here, you have the time. To the right of it, you have the symbol for the ticker that the options are being traded. To the right of that, you've got the expiration date, and you've got the strike price, whether it was a call or a put. Then you have the spot. The spot tells you exactly where the stock was trading when we picked up these options trades. Then you've got details. Details tell you how many contracts were traded and at what price. Then you'll be informed as to whether it was a sweep trade or a block trade, and you can see how much money went into this trade. To the right of that, finally, you've got implied volatility. Implied volatility built right in to the alert stream. Now, let's talk a little bit more about these alerts and what they mean. First, let's talk about the differences between sweeps and blocks. If you ever want a refresher course on anything that we're about to discuss, again, we've got it real simple for you in black and white. We've got a nice options log key for you to refresh your memory, but I'm going to go over it all with you. What's the difference between the sweep trades and the block trades? Well, a sweep trade, let's talk about block trades first. A block trade is usually a pre-negotiated trade that is tied to stock, and the trade is placed on one exchange. What does that mean? Well, let's say I own a tremendous amount of Apple shares. And let's say that I'm afraid that the price of Apple is going to fall. So I call up my broker and I say, broker, I own a lot of Apple shares and I'm afraid the price might fall. Sell me some puts at a good price just to protect myself, just in case. And the broker says, oh, okay, McDeggins, we will sell you enough puts to cover your shares and we will sell them for you at a price that is below market. And then I say, hot diggity dog, put that trade through. They put the trade through on their own exchange and they write me the contracts. That is an example of a block trade, usually pre-negotiated, usually tied to stock, usually placed on one exchange. A sweep trade is a little bit more aggressive. A sweep trade is not pre-negotiated and it is placed across multiple exchanges. Whoever's placing a sweep trade does not care who fills them as long as they get their contracts. So we tend to place a little bit more focus on sweep trades because they are more aggressive. Now, what do these letters mean? Sometimes you'll see A, sometimes you'll see AA, sometimes you'll see B, sometimes you'll see BB. What does all that mean? Well, it's actually quite simple. If you see an A, that means that these contracts were traded on the ask. If you see an AA, that means that these contracts were traded above the ask. If you see a B, that means that the contracts were traded on the bid. And if you see a BB, that means that the contracts were traded below the bid. Why is that important? Because we know that calls that trade on or above the ask are bullish. Calls that trade on or below the bid are bearish. And the opposite rings true for puts. Puts that trade on or above the ask are bearish, and puts that trade on or below the bid are bullish. Awesome stuff, and we actually can see where something was traded. Now, at the same time, you'll notice there's different colors. We've got different colors in here. What do these colors mean? Well, white alerts tell you that the day's open interest has not yet been exceeded. If you see a couple of white trades come through and then those alerts start to turn purple, well, that means that the open interest has now been exceeded. If you see a yellow trade come through, that means that open interest has been exceeded in this one trade. So what we know is that when we see a yellow transaction like this one, we know for sure this is somebody opening a new position because open interest was exceeded in one trade. Awesome stuff. We can see new opening transactions. Now, if you ever want to filter any of this stuff out, we have a bunch of really awesome filters. You could filter out if you want to see only puts, only calls. You could filter out your favorite colors. You could filter out if you want to see above the ask only or below the bid only. You could filter out the price paid for the contracts, whether you want to see contracts that are trading above 50 cents or contracts that are trading above $5. You can even filter out the amount of money that goes into the trade. So if you only want to see options trades that were worth 500,000 or more, you can select that option. You can also select to focus in squarely on sweeps or focus in squarely on trades that traded over 100 or 500 contracts. We added these filters as per the demands of our family of traders. We listened. You asked for it. You got it. Now, how do we make sense of all of this? Let's pull up Disney. We see that we had a lot of Disney flow today, a lot of flow coming in. Look at all this. This is a ton of options flow, a ton of options flow. How do we make sense of it? Wow, look at that movement on Disney. Guaranteed people made money on this Disney in the BlackBoxStocks trade rooms. Guaranteed that on Wednesday, a lot of people made money. Well, this is a lot of options flow for one day. How can we make sense of this? How can I tell if this is bullish or bearish in nature? Well, it's very simple. We've added a feature that will help you decide in seconds whether the flow is bearish or bullish. This is our heat map. And this is how it works. We've got the strike prices running down the center. We've got C0, calls that expire this week. C1, calls that expire next week. C2, calls that expire in all subsequent weeks. Then we've got P0, puts that expire this week. P1, puts that expire next week. And P2, puts that expire in all subsequent weeks. Now, how do we make sense of this? Well, black text means that most of these contracts were traded between the bid and the ask price. Blue text means that most of these contracts were traded above the ask price. And red text means most of these contracts were traded on or below the bid price. Awesome stuff. Now, when you see red shading, that is indicative of bearish activity. When you see blue shading, when you see green shading, that is indicative of bullish activity. So I can look at this and I can instantaneously tell a ton more contracts were traded bullishly than they were traded bearishly. It's there. In seconds, I can discern that information. And look, it's right on the money because this is all bullish flow, and we had a seriously bullish day on Wednesday for Disney. Awesome stuff. Now, the next button down here is the OI tab. The OI tab is going to tell you the top 100 calls and puts sorted by the largest increases and decreases in open interest. You can use this filter button to see the top calls or the bottom calls, or the top puts or the bottom puts. The open interest displayed is today's current open interest, and the DOI is the change in open interest from yesterday's open interest. Awesome stuff. The next button down here is our volume button. This is going to tell you what options contracts are trading the most unusual volume based on a 10-day average. So it's going to give you the top 100 stock and index symbols sorted by their total options volume for the day relative to their options volume. So their average options volume. So GSK traded 104,000 contracts. 102,000 of them were calls and 2,000 of them were puts. So the put to call ratio is 0 because many more calls traded than puts. The average volume is 2,200 contracts. So today's ratio compared to the average tells us that GSK today is trading 46 times its usual volume of contracts. The COI is the call open interest. The POI is the put open interest. DCOI is the change in call open interest. And DPOI is the change in put open interest. Awesome stuff. Now, we've got a little alert button down here. I'm going to skip over that, and I'm going to come back to that in just a minute. Sit tight. I know everyone always likes to see the alerts. Hang out for a second. We'll get there. Let's go back to our flow section. Let's say we're watching the flow, and we see something that we don't usually see much of. I don't usually see much flow on AUPH. So how can I make some sense of this? How can I gain something from this if there hasn't been that much flow for that day? All I have to do is click this button right here. This is the historical button, and you can actually go back as far as you like. Let's go all the way back to April. And now I'll have all of the options flow that we picked up for AUPH since April loaded right into our window. We store every single line item of flow that comes through so that you can refer to it at a later date if you need to. Now, it costs us $1 or $2 to store this information, but it gives our family of traders the best edge possible. So we're happy to store this information from you. Now, all of these items, all of it, the daily flow, the historical flow, the volume, open interest, heat maps even, all of this stuff can be downloaded to your computer anytime you want by simply clicking right here. And when you click that button, boom, now you've got the flow. It's an awesome feature that we've just added, again, because our family of traders asked for it. We're always keeping our ears open. This system is constantly evolving and changing according to what our family of traders are asking for. It's really an awesome thing. Now, what if you want to make money with the BlackBoxStocks trading system? How do you do it? How do you make some money with the system? Well, let's go through some strategies. If you're trading stocks or OTCs, the best place for you to start is by keeping your eye on the news feed and keeping your eye on the alerts. If you see an alert come through and you click and you see that news just recently dropped, by all means, enter if you got that news fast enough. If you're a little late to the party, then watch the volatility indicator. Watch for that pullback. And when the pullback comes, then you can enter. Just don't ever chase anything if you're late to the party. Now, same thing applies for the OTC. You're watching the alerts, and then you're watching for news, and you're watching the price action. Now, how about options? There's a lot of information to process, right? Well, we're going to make it simple. If you want to trade options, all you have to do is filter out all of the colors. Get rid of the whites. You want to see strictly the yellow and magentas. That's all you want. You primarily want to be focusing in on sweeps that are predominantly moving in one direction. Now, once you see some consistency, check the charts, both of the contract and of the stock, and make sure that the prices are walking in the direction of the alert. So, of the flow. So, if you saw flow that was bearish, make sure that the chart is moving bearishly. If you see some consistency there, trade in the direction of the trend, whether it's bullish or bearish. Again, just don't chase at high of day. Look for your pullbacks. Let your pullbacks be the guide of where you should enter. Now, what if you can't watch the options flow all day long? What if you can't do that? What if you want to be alerted of potential trades? Well, we've designed a feature to our system that will alert you of potential trades wherever you are through your mobile device, just like a text message. And the way you get access to this alert feed is by joining our BlackBoxStocks private Twitter account. This is a new feature, and we've got 7 to 20 trades being alerted in a day. And like I said, these alerts can be sent directly to your mobile device when your notification settings are configured to do so. This is generally what the alerts look like: the time, the type of alert, the symbol, the premium paid, the expiration date, whether it was a call or a put, the strike price, and the amount of money that went into the trade. Now, here on this tab, we are showing you the different types of alerts. We've got 6 different alert types. Swift alerts are triggered when our algorithms detect that all of our criteria was met within 5 minutes. Steady alerts are triggered when our algorithms detect that our criteria is met with 60 minutes. Large alerts are triggered when our algorithm sees a giant yellow call sweep filling at or above the ask. Roulette alerts are triggered when our algorithms detect an opening transaction that expires in the current week. These are a little bit more speculative, so trade them at your own risk. But if you've got a good trade plan with a good risk reward system and you're using a nice trailing stop loss, you will do well with all of our alerts. Then you've got the repeater alerts. These alerts are triggered when our algorithms detect consistent options flow with the pricing on the options trending upwards. So it's looking for that consistency that I was talking to you about. Once we see that consistency over a length of time, we will alert you to the repeater alerts. The rapid fires are a little different. So the repeaters, we're looking for consistency over the course of a period of time. Rapid fires, we're looking for consistencies one right after the other. So repeater alerts are like boom, and then another hour later, boom, we got some more flow. Boom, another 20 minutes, boom. Rapid fire alerts are boom, 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 boom. One right after the other. Rapid fire like trading in an options contract. Awesome stuff, amazing, very efficient. Let's take a look at the alerts for that Wednesday that we were talking about. So we had 2, 4, 6, 8, 10, 12, 14, 16 alerts. Out of the 16 alerts, from the point where we checked in on them, 2, 4, 6, 8 of them were profitable. Okay, but I'm telling you, look, all of them, every single one of them was potentially profitable. Every single one of them, bar none, was potentially profitable at one point or another. Are they all going to stay profitable all day long? Absolutely not. But every single one of these alerts were potentially profitable. And look, the gains range from about 1% to over 280%. Today, we had 3 alerts, well, for that Wednesday at least, we had 3 alerts that went over 170% in one day. So again, if you use a nice trailing stop loss, you will do very well with these alerts. Now, let's take a look over at our Discord channel. When you enter our Discord channel, you will be entered into our waiting room. When you're in our waiting room, you're going to ask to be ported over to our members section. When our members channels open up to you, you're going to notice that our moderators each have their own trade rooms. Let's say you only like to focus on Teresa or Maria. Well, all you have to do is click right on their trade room and boom, now you'll see all of their real-time trades. They're posting their trades in real time. Check it out. Check these scalps out. So, LK scalped, D-Dog scalped from 105 to 129, and LK scalped 50 cents to 43 cents. Listen, nobody is right 100% of the time. Nobody. And anybody who tells you they are is lying. We show you all of our gains and we show you all of our losses. And we shout these out in real time. Now, what I will tell you is that our moderators, 85% of the time, they're right on the money. And you could take that to the bank. Our moderators are killing it on a daily basis in here. And we're going to get to showing you that in a few minutes. Now, Additionally, you will be opened up to access to our main trade room. Our main trade room could have anywhere from 500 to 700 people in there during market hours. So tons of ideas are being posted, confirmations are being posted. Everybody's really cool with everybody. Everybody's respectful. Everybody's there to help each other out. It's a really great team atmosphere. Now, oh, MBot killed this trade. Anyway, also, you'll be opened up to our voice channel. Here's our voice channel. When you enter our voice channel, you'll notice there could be anywhere from 300 to 500 people on voice at any given time during market hours. You would think with that many people in a voice channel that it gets a little bit congested and that people are constantly talking over one another. Well, you'd be wrong. In reality, everybody is very respectful of everybody, okay? And one person speaks at a time. Also, you will have access to our flex rooms. Our flex rooms are where we're going to send you if you are talking about something that is not market related during market hours. Listen, you want to talk about politics? You want to have a presidential debate? Good for you. Have it in the flex room. During market hours, we're talking stocks. We're looking for tickers to trade. Also, in the flex rooms during market hours, sometimes we'll hold charting classes or options flow reading classes. Or, sometimes Pete would like to have his charting classes during the day. These flex rooms are where you will go if you want to join our options charting classes, live options flow reading classes during market hours. We will do those twice a week or so. Beneath that, we've got tons of trading and training and resources that you can use to brush up on your trading and your technical analysis. Tons of psychological tools that you can use to help you keep a calm head. Tons of strategies being posted in here. Also, you'll have access to our scripting section. Let's say somebody has an indicator and you want to get that indicator. All you have to do is copy and paste these Thinkorswim links right into your Thinkorswim platform, and boom, you can download those indicators right into your own platform. Another really cool thing about this channel is a lot of the people within our family of traders are actually computer programmers themselves. So if you go back, you might find language like this, computer language. You could just copy and paste this computer language right into your platform. And now you will have access to the homemade indicators that our family of traders has created. Homemade custom indicators. I told you, everybody shares with everybody. We've also got a little support section for those of you who need some support, technical support or otherwise. You would go into the support area and ask away. Let's talk about our moderators. We've got Maria, Teresa, Namish, Spectre, The Kang, Charlie, Mel Stone, myself, Mr. McDeggins. All of us are piled into that trading room on Discord. On the stock trading room on the website, we've got Tia. Now, what are the moderators there to do? We shout out our trades in real time. Okay, we keep the rooms running smoothly, and we provide basic assistance. We can't provide one-on-one trading lessons in private. It's not fair to everyone else in the trade room. But what we will do is every Tuesday and Thursday, we will stick around after market with you, and we will do Q&A. For as long as you need us, we will answer your detailed questions. Be sure to join us for Q&A Tuesday and Thursday every week in Discord. Okay. All right. This is my favorite part of every webinar that I do. This is the part where we take a look at some of the alerts and just a few of the trades placed by our family of traders this week using the BlackBoxStocks trading system. Welcome to this week in BlackBoxStocks. You will note that I have taken the liberty of taking some snips of some of the ongoings, both within the website and within our trade rooms. Let's talk about the first alert. This alert came through on Tuesday. This alert was for APDN. The alert came through at $6.60. It ran to a high of $19.69. You heard me right. 185% gained. Awesome stuff. Now, what was the news? Boom, we picked up that news. And we picked up that news instantaneously. We picked up that news before the alert even came. So, if you picked up the alert, you zoomed over to the news, DNA, success in DNA tagging, that's a major headline. You knew this was coming. You could have had a monster scalp on your hands. Beautiful stuff. Next up, let's look at what happened Monday. So this image was taken Tuesday of the day before's top 10 gainers. Look at what happened Monday. TRNX, 33% potential gain. LPCN, 23% potential gain. CNST, 21% potential gain. I mean, it just keeps going and going. It was a great day that Monday. Next up, OTC traders. I didn't forget about you. OTC traders, we had a monster day on Monday also. Look, DAVC, 95% potential gain. This RASJQ, 87%. BMIX, 51%. MRJT, 44%. Are you getting the message? All from this week. And let's take a look at some of the Twitter alerts that came through on Tuesday, November 12th. So how many alerts did we have? 2, 4, 6, 8, 10, 12, 14, 16, 17 alerts. All 17 alerts were potentially profitable, with gains ranging from under 1% to over 50%. I showed you the gains for Wednesday also. All of them potential gainers, and we had 3 gainers over 170%. Awesome stuff. Amazing. It's one thing if you can design an algorithmic system that's going to be right 6 out of 10 times. But BlackBoxStocks has designed an algorithmic system that is right 95 times out of 100. And when you've done that, you know you're doing something right. Money to be made. Let's look at some of the trades. HK with a quick 200% scalp on the Qs. Awesome stuff. 30 minutes, 200% gained. Awesome stuff. Way to go, HK. Next up, JKK. Shouting out Teresa. Close to 100% Friday. Traded 5 Netflix 295s from 36 cents to 70 cents. And the confirmation was there underneath it. Shouting out Teresa because Teresa shouted out the Netflix. Our moderator, Teresa. Awesome. Awesome. Next up, Bender, another moderator. Look at this monstrous trade that Bender posted. He warned everyone that it was risky. He entered for 30 cents, sold a third for over 100%, sold the rest for about 200%, sold the rest of them, cut the rest off at about 300%. Just amazing stuff. Way to go, Bender. Awesome. Rocking and rolling. Our moderators, I'm telling you, they're killing it. Next up, J Options, small account, up 100% today. Shouting out Teresa. The reason why I posted this is because I wanted to show you. You don't need to have $10,000, $15,000, $100,000 to make money in the stock market. You can trade a small account and still make great money. Look, in one day, the account was up from $461 all the way to $919 in one day. Amazing stuff. Next up, Brent nailing the Wednesday, 100% Wednesday. Look at that. Just plain beautiful. Nailing these Teslas from $1.08 to $2.19. Killing it on a Wednesday. Way to go, Brent. Congratulations. Tech Money, just an awesome guy to know. Awesome guy to know, always positive, always upbeat, fully motivational, just killing it. And he had these Nike calls, filled them at 50 cents, wasn't worried, cut some of them at 83 cents from 50, letting the rest ride. Why is this important? Because he took some of his profits off the table. It's okay, you want to let it ride, but at least protect your profits. So he cut some at 83 cents from 50 cents, took over 50% on those. Another moderator just killing it in the moderator section. Way to go, Tech Money. Love you, buddy. Next up, Teresa. We keep mentioning her over and over again. She's shouting them out and she's posting them in real time. This Qualcomm trade. This was gorgeous. Gorgeous, this Qualcomm trade. She entered at 48 cents at 9:35. Less than 20 minutes later, she was up over 100%. This is amazing. Teresa, another great moderator. And not only that, positive, wonderful, upbeat, cheery. She's just awesome to be around, awesome to trade around, and awesome to know. Way to go, Teresa. Killing it. And we've got Easy Rider. Easy Rider with these gains. Look at these gains. 725% gained on Tesla. And then another trade, 42% gained on Tesla. Just killing it. Killing it is Easy Rider. And Easy Rider, you killed it so dead that you are this week's BlackBoxStocks Superstar of the Week. Way to go. Great job, buddy. Next up, Fire Guy. Oh, I'm sorry. Fire Guy was overshadowed. I'm sorry. We might have to have two superstars this week. Fire Guy started this account as part of a $500 challenge, and Roku took him above and beyond the $10,000 mark. Here it is. Current account, $10,000. Roku with $1,000 in a day for him, 353%. You know what? We've got co-superstars. And he writes, this account was started as part of a $500 challenge. For the record, I still don't care for Robinhood, but I love BlackBoxStocks. You know what, Fire Guy? You killed it. From $500 to over $10,000 as part of our $500 account challenge. Good for you, buddy. Congratulations. You and Easy Rider are co-superstars. Awesome stuff. Next up, let's see what people are saying. Almonds writes is going to be opening a Roth IRA next week with some of the profits that were made from trading. Graduated college a year ago, and being able to fund an IRA with no debt makes Almonds very happy. And Almonds writes, thank you for having me. I absolutely love the Black Box community, and you guys are very helpful. Shouting out the moderators. Almonds, good for you. You've paid off your college debt, and now you're funding your IRA. Good for you. We're glad to have you as part of our family of traders, buddy. Congratulations, man. And way to think ahead with the IRA. Next up, listen, I've been talking about this guy. I've been hiding his identity, but I want to give you an update. We posted this about a year ago. He wrote, I was laid off in December. Because of you all, I've been able to replace the income consistently. You change lives. Almost 1 full year later, he's still here. He's still here. And he writes, this is an amazing life thanks to BlackBoxStocks. Lost my job this time last year, and you moderators and Charlie taught me how to actually make a steady income to support my family. Thank you all. You have no idea how touching this is for me to read. How happy this makes me. This is amazing stuff. Next up, Option Opulence had a wonderful visit to Black Box HQ in Dallas. Very impressed. Thank you guys for everything you do. BlackBoxStocks is a real company. We have a real office in a real building. We're not some guy who's sitting in his mom's basement trying to lead you around. This is a real company with a real office in a commercial building in Dallas. And we've got open doors for anybody who wants to come down. Let us know. We'll give you the tour. We'll host you. We'll show you. I'm glad that Option Opulence went down there. And thank you for sharing with us that you came down. And thank you for the positive words. Next up, Eric68 writes, I just want to thank all of you guys. I had an awesome swing on NVIDIA overnight, and I owe the $390 profit to all of you. It was as good as an exit as I could have asked for. Normally, I would have panicked and sold that first red candle this morning, but I learned from you guys that usually, not always, but usually, the first candle is wrong, and I played the trade out calmly. Thank you. You are turning me and a lot of other newbies like me into traders and not followers. This is why we do what we do. These 4 examples are the reason why we do what we do. We said it in the beginning, and I'm going to say it again. We don't want you to be followers. We don't pretend to be gurus that can make you rich by following us. What we do tell you is that we give you a suite of tools that we want you to learn to use so that you could become a self-sufficient trader and a contributor to the BlackBoxStocks family. And this is the proof that we are accomplishing our mission statement, and it makes me very, very happy to see. So, having seen the money being made, having seen the things that people are saying, the next question really has to be, Mr. McDeggins, how much does all of this cost? That's a great question. That's a question I'm going to answer for you. But before I do that, I want to make you aware of some of the facts. The facts are that there are some chat rooms out there that charge $2,400 a month all the way up to $25,000 per year to gain access to their chat rooms. You don't get access to any news feeds. There's no algorithmic system, no scanners, no website platforms. Just for a chat room with alerts made by a person, you could pay anywhere from $2,400 to $25,000 per year. What's the matter? You don't believe me? Well, I've taken the liberty of taking some snips of some other companies out there, what they offer and what you get for the money that you're paying. The first company that we're going to talk about charges $197 a month, so $200 a month. And what do you get? All you're getting is access to a chat room and access to a watch list. That's it. They say market commentary, but that's just people talking about stocks in the chat room. So all you're getting for $200 a month is chat room access and access to a watch list. That's it. This next individual here and others just like him have the nerve to charge $500 a month for day trades, $500 a month for swing picks, or $744 for the combination of the two. Now, you'll notice that on the bottom there's a silver tier. Charges $197 for either or $300 for the combination. Let's talk a little bit about this guy. This guy's entire strategy revolves around trading at high of day. He chases low floats at the high of day. That is a very dangerous strategy. Very dangerous. He's lost a lot of people a lot of money. Now, we only ran into this guy because we heard through our family of traders what he was doing. He's lost a lot of people, a lot of money, and now a lot of his former traders are a part of our family. Now, he also has this silver tier. What's the silver tier? Well, you're paying $300 a month, but at the end of every month, you are still sending your personal identifying information, your statements to him. He goes through your statements, and any gains that you have to split with him. Does he pay you back for any of his losses? Not even a penny. But every gain that you have with him, he charges you a split for. Now, let's talk about some things people don't know. What people don't know is that this guy recently started hiring a model to run around on Twitter and pretend that she's the one doing the trading. She's not. When you ask for a link to the service, she sends you right to this guy. It's a scam to get people to come in. Now, at the same time, what people don't know is that this guy is located in Central Europe. When someone in Central Europe has access to your accounts and your personal identifying information, they can do a lot of damage if they want to go rogue one day. And you don't have much recourse against a guy like this. So please be very wary of dealing with people like this. And again, all you're getting is alerts. They're not teaching you anything, nothing. And he's lost a lot of people a lot of money. Beware of those supposed gurus. Now, speaking of supposed gurus, I know you know this knucklehead, and now there's a bunch of knucklehead copycats running around just like him. This is the big mouth that's running around on YouTube and on every other forum that will allow him to speak, yelling into the camera, talking about how easy it is to make money in the stock market. All you have to do is download my free ebook and you can get started. Well, it's a lie. The ebook is a hook to get you to join their mentorship programs. And membership into these mentorship programs, they're all the same. They're all the same, give or take a couple of $1,000s. This one in particular costs $15,000 for the first year and $5,000 every year after that. Or they charge you $25,000 for the first year and access for life. And what do you get? You get access to picks, a watch list, a market screener, which is basically a thinkorswim scan, and access to a chat room. That's it. Nothing advanced about it. You're not getting any tools to succeed. You got to be very wary of doing business with people like this, because if they go out of business or if for any reason they get shut down, you lose your $25,000. It's in the contract. And if they were so good at trading, they wouldn't have to be teachers. They would just trade and be billionaires. The fact is, they make their money on the mentorship programs. They don't make their money on the trading. So, having seen all of this, the question really has to be, Mr. McDeggins, how much does it cost to join the BlackBoxStocks family of traders? Well, I'll tell you this. It's not going to cost you $25,000 a year. It's not going to cost you $20,000 a year. It's not going to cost you $10,000. It's not even going to cost you $2,000 a year. It's not even close. If you want to join the BlackBoxStocks family of traders and you want to have access to all of these awesome resources that we just went over, it's going to come to you at a cost of only $99.97. That's $99.97 a month. That is less than it costs to get a cup of coffee every day at Starbucks. And hang on, because we have a special discount for those of you who select an annual membership. When you are joining our family of traders, if you select the annual membership option, the entire year is only going to cost you $959. That is less than $80 a month. That saves you $240 a year over the cost of monthly membership. And one way or the other, when you're part of our family of traders, you are automatically paying yourself back from the very first month you join us. And I'm going to explain how. If you purchase a subscription to the Fly newsfeed, and then you combine that with a subscription to systems that will alert you to dark pool information and trade halts and technical moves, the entire combined suite of tools can cost you anywhere from $250 a month or more. And that still doesn't give you all of the resources that BlackBoxStocks provides for you all in one place. When you join the BlackBoxStocks family of traders, you will automatically have access to a stream from the Fly newsfeed. You will automatically have access to dark pool information, and you will have the tons of other resources that BlackBox offers you all in one place. Combining the suite of tools you gain through being a BlackBoxStocks family member instantly saves you hundreds of dollars a month. Add that to the value of being in our trade rooms and having access to all of our educational resources, and this makes joining the BlackBoxStocks family of traders an absolute no-brainer. It just makes sense. You are literally paying yourself back from the very first month you join us. And with that, I want to congratulate you because you made it. You have completed the BlackBoxStocks Bootcamp webinar. You have learned what stocks and options are, and you've learned how to use the one-of-a-kind BlackBoxStocks trading system to help you achieve your financial goals through stock and options trading. You've seen real alerts from this week, and you've seen real results from this week from some of our family of traders. And most importantly, you've been shown the math. The math as to how being a part of our BlackBoxStocks family of traders literally pays you money from the very first month you join us. And now you are ready. You are ready to begin your journey to achieving your financial goals. You are ready to invest in yourself and join the BlackBoxStocks family of traders. So click the link in the description below. Head on over to our webpage, join our family of traders, and we will see you in our trade room on the next market day. Thank you all very much for joining us. We look forward to seeing you and learning with you as we all grow our knowledge, grow our family of traders, and as we all grow our accounts. So long, everybody. Have a great and green day. And again, we will see you in the trade room.